Hello, hello. Good morning. Quick sound check. Hello, hello. Test, test, test. 1, 2, testing. Is this thing on? Pop a little hello in the chat box and let's get going. So, ahoy there. Happy New Year. Welcome, welcome all. And once again, it's my first official Friday of the trading year, although it's not the first Friday. But nonetheless, it's a pleasure to see you all here. Thank you for taking a moment out of your day to spend it with little old me. It is very much appreciated. I fully appreciate that time is the biggest thing that you can give anyone. So it is appreciated that you spend a little bit of your Friday morning with me. So we're going to revisit a few things. My cat was trying to destroy something in the background. So what we're going to do is we're going to revisit one or two things that we looked at on our last session of the year, and it kind of follows on. And we're just going to basically revisit thinning the herd or the clone army of stocks. Again, there's so many metaphors that we could use to describe this, but ultimately, the thing that I'm a big fan of is I don't want to look at every stock every day, all of the time. There's a time and a place to do it, and I do it maybe once, and at a push, I'll do it twice a year, meaning that I'll scan the entire universe of 20,000+ stocks and try and thin the herd, which is what we looked at last week. So we're just going to revisit that and look into a little bit more detail of how do we actually find something to trade. So that's on the docket today. For those of you who are new and this is your first day, the usual format is we'll have a little look at the charts. We'll look at the market overview. What's the broad opinion of where things are going, and which at the moment is anyone's guess. But we've got a few stocks. I've had a few cheeky little trades this year to get me back into the swing of things, and we'll review some of those, and then we'll look at how do we actually find things to trade. But as I said, if this is your first time, I am not a Wall Street guru. I have not worked on the streets, either Fleet Street or Wall Street, because obviously I'm in the UK. I do focus my attention on US stocks. All I am is a guy that's figured it out. I always play down what I do, but I did it the hard way. I spent a lot of time looking at charts. I did the thing that I said I don't like doing for many years, which is to sit for 12 years looking at the charts, figuring it out, and I figured it out pretty quickly. So all I am is just some guy who's cracked the code. I've made a 20-something year career of this now, so I think that qualifies me to at least pass on the benefits of my experience. At the very least, you should be able to see that. I am just a regular guy. I'm very passionate about helping you see your success. And the biggest motivation behind that is I never had anyone to ask when I started out. And that's one of the things that I love doing is, being able to help people who are genuinely serious about making this work for themselves. I am the type of person that stops tourists when we can get out and about to see if they need directions. It's just in my nature. It's one of the things that I get asked, why do you teach? I love doing it. I was a Gladden instructor for 7 years. I like teaching people. When I did work for the man, it was in some form of kind of like career development as a part of whatever I was doing. So it's just in my nature. So in case you're wondering why I do it, that's why I do it. Some people like doing it, other people don't. So that's why I like doing it. So I've been trading full time since 2001, hand drawn shots since the early mid-90s, calling all my trades out in real time since 2004. We've got the backstory there. It's just really to demonstrate that this isn't my first rodeo, as the kids like to say over in the States. So that said, let's jump into the charts. Let's go and look at the clone army. Let's take a look at the charts. So just we've got a nice just looking at the attendee list. If this is your first time, just feel free to pop a comment. Again, I got some of the old names. Hey Colin, Adrian, Brian, Class, Duncan, Glenn. Hey Glenn, nice to see you. Hope you had a good Christmas. Rob, of course, there you are. Rob, Rodrigo, Ruben, what are we? Steve, Vito. Awesome. A couple of new names. a couple of old names. If I've missed your name out and there are one or two people still logging in, I can just see you coming in. It's nothing personal. I was just skipping over the names. So let's take a look at the charts. What a weird year last year was. Did anyone notice something weird going on? The markets didn't seem to care, is what I can take out of this. I've got, just looking at the daily charts, I've got since May, if you just looked at May, it's like it's going up, and then you put the charts a little bit further back and there is a little bit of a blip on the charts. When you put the last 12 months into perspective, there's not, you'd be hard pressed to say what crash. And this is the thing that I've got to admit, just looking back on the last 12 months for a moment, looking out the window, there is weird things going on. Despite what happened on Wednesday, weird things have been going on for the last year. And there's still, the biggest concern that I've got is the divide between Wall Street and Main Street. And that is an ever-present concern. Yeah, it's an ever-present concern. And I know I sound like I'm wearing my tinfoil helmets for the old hats and the old guards who come and tune in and listen to me say pretty much the same thing every week, but it is a concern. And for anyone who's got their eyes open, it should be a concern. Can you trade that opinion? Because at the moment, it's just an opinion. And I got caught, middle of the year trying to trade that opinion bearish. I've never been more bearish than I am now on the markets. And that's probably going to be in effect for a while, because it's undeniable that the market is going up. Stonks, whatever you want to call it, Fed's got your back, baby. All those phrases that we've heard many, many times, or maybe it's just in my head. But it's undeniable that the markets are going up. So there's just such a divide there. So mentally, I've had to change gears. I still think we're going to see a bearish movement. I'd like to, as always, whenever I talk bearish, I'd like to see a healthy market correction, a healthy bear market. I'm just going to pop the weekly chart on. I'd like to see a bear market cycle. When you look at things since 2009, the lows there, the market's been going up and up and up and up. So we are due a healthy bear market, and the bear market could be sideways. It could be a decline. Anywhere from 15 to 30% would be fairly reasonable, and that would be a reasonable expectation. But a slow decline would be good. An economic contraction, is it going to happen? Probably not. But it just seems like we're missing multiple economic cycles, normal, healthy expansions and contractions. And they happen every 4 or 5 years. You're going to see 4 or 5 years of growth. You're going to see 1 to 2 years of contraction. It can be as little as 4 to 8 months on the contraction side. And you don't have to take my word for it. That's what history tells us over the last 100, 200, 300. Go back and look at since the records began. So it's a normal part of the cycle of economics. And that's really what's motivating this bear market, this bearish sentiment. I had a similar viewpoint back prior to 2008 crash. For 2 years, I was talking bearish. So I'm just kind of preparing you to strap in. I'm going to have this viewpoint until it unfolds. But with that said, it's undeniable the markets are going up. So what do we do about it? You've got to continue to buy the dips and sell the rallies. You've got to follow what price is doing, because otherwise you're going to fall into that trap of what I did earlier last year now, is trying to trade that opinion. And it took me a little bit of a while to kind of turn that around. Again, I've been very open about that. I've been very transparent about some of the trading opinions that I had versus trying to trade the strategy that we've got. It's well defined. On the bright side, what it has allowed me to do is to kind of firm the rule set that we use and that we know and love. So, there's a silver lining in everything. But nonetheless, the market's going up. What do I think is going to happen over the next, I'd like to say the next 12 months, 2021, what's going to happen over this next 12 months? I don't think, given everything that we've got going on at the moment, that I could pop a forecast in as to like what the year's going to unfold at. What do I think is going to happen over the next, say, 3 months? You know, I think this is going to continue. It's very clear that we've got this rising channel. Price is moving high. It's just starting to break out. We were looking at this possibly breaking near the end of the year. I suspected we might have had the breakout as a part of what most people consider the Christmas rally. The Santa rally. It didn't happen, but hey, that was, again, an opinion, my viewpoints. But the market is starting to move higher out of this consolidation that happened through November, December. Going into the new year, we are starting to see new highs. Now, what is nice to see is, if we just look down at volume, I don't normally look at volume because it's very open to discretion. Prior to the new year, we had this rally, only a slight rally, slight upward incline on reduced volume. And it was quite dramatically, it was almost half or non-existent in some cases. Again, this is the futures. So the fact that we're seeing volume come back into the rally is quite attractive to me. It might just support continued movements. So thinking about the next 3 months, I think this is going to continue. I think the change of administration in the US, it's usually a positive thing. The market usually responds favorably. Usually the first year, the first 12 months of new administration is positive to the markets. And thinking about cyclical things, the third year of term is usually very bullish in the US economic cycle as well. So the first and third terms, if you look through like all the available data and history that's available, they're usually very bullish in regards to the election cycle. So the first 3 months, I'm expecting that to continue. We've had some great moves up to this point. I don't see that changing anytime soon as the short version. We've got the Dow looking very similar. We've got the NASDAQ finally doing a little bit of a catch-up move. Middle of the week, I was very bearish. I was thinking that we might see this 1250 breach because it was doing something very different to the rest of the markets. And I thought that might be kind of leading the charge to a little bit of a correction, not a crash essentially, but just something like that, just a 3, 4, 5 days, maybe 2 or 3 weeks of retracement. As it is, it's turned around. That viewpoint, that short-term viewpoint has nullified. Russell does seem to be leading the charge ever higher. It didn't really, it clearly didn't have that consolidation in the same way as old tech, the Dow, the S&P. The Russell is certainly leading the charge ever higher. No sideways consolidation, no deep retracement, and just continues to make new highs and new highs on, again, just looking back at the volume here, and this is the futures. The last time we saw volume like this on the futures market was way back in June. So we've got a significant interest in the Russell 2000 stock. So that should be, or that could be very telling. And it's probably on the back of the stimulus, the new money being printed, the cash injections, the handouts, all the rest of it. You could kind of argue that the smaller businesses are finally getting some support, much needed support that they need. And this really just firms up the viewpoint that over the next 3 months, that support is going to be translated into positive and bullish movements. So for the next quarter, I think it's going to be more of the same, which is great news for us as traders. It means that we've got movement, we've got elevated activity, we've got a break of consolidation patterns when we look at some of the other stocks, again, like the S&P, like the Dow, like the NASDAQ. They're starting to move and shake, which is great news. And again, it's all for me pointing to a volume confirmed breakouts to new highs, all-time highs, and that's usually a good sign. So I think that kind of wraps up and rounds up where we're going. I probably could have summed up with up. It's going up, but that's all we need to know. So before we move on, any questions about the markets? Anyone got any special requests for anything that they want to look at? Again, it's just a little overview of the markets. And we suppose we could look at the FANGs. The FANGs really going to support what we've just looked at the index level. So I would imagine that there's not going to be a great deal difference on the viewpoints there. All right. Okay, let me just have a little drink. I've got a bit of a sore throat today, folks. So if you just bear with me, I'm probably going to take several water breaks. So if you just bear with me a second. I've managed to stave off coughs and colds this winter season, but it's finally caught up on me. So let's just jump back to, where's my handy dandy slides? So let's jump back to the clone army. It's just my weird metaphor, again, very similar to what we looked at the last session of last year of thinning the herd. All we're going to look at is how do we canon clone the best opportunities. That's kind of like the flavor of what I'd like to talk about. It all starts with a universe of stocks. And again, at the end of last year, we went through in a lot of detail about the universe of stocks. If you want a copy of the list, you can go to my website, /best-stocks. Again, you can find it on the navigation page. It's the first thing on the blog. If you want to create your own universe, you can go and download the kind of the full universe of stocks. I know I'm going to trade options, for example. So I can, instead of looking through and using all the softwares that are out there and scanning the entire universe of every stock that would include pink sheets, penny stocks, and all the other nonsense that's out there, because my preferred trading vehicle is with stock options, even if I'm day trading or swing trading, it's with stock options. So what I can do is I can kind of trim the universe of stocks very quickly as my kind of fat starting point to trim the herd and start thinking about canning and cloning opportunities, is to go to the SIBO website and just download their stock list. I've downloaded the weekly options stock list as my foundation. You could also go to the main stock list and just get everything with weekly and quarterly options. Again, you've got the lists there. But if you just want a base universe of stocks that a wellspring to draw from, for want of a better description, this is where I start. And then from that, I would typically then again trim the fats. And again, we went through that. Again, I'm trying not to kind of go through it in any detail, but we went through it in the last session, thinning the herd, of how to do this, create a universe of stocks. So why do we do that? Why do we create a universe of stocks? It comes back to, I don't want to look at every stock every day, all of the time. It's very simple concepts. And if I've got what I believe is the top 100, the top 200, or the top 500, whatever you consider a suitable list of stocks to trade from, or a wellspring, we're not going to trade all of those stocks and we're not going to look at all of those stocks, but that's the universe that you play in. A watch list is what might be a better description. And that's my universe. So it allows me to scan. We're going to look at that, the scanning, the how do we clone trades. It allows me to find opportunities, which is what I've done this week. It's what I tend to focus on at the moment. Again, we find stocks that we can clone trades. And again, it's just a different way of saying we're looking for setups. Again, we've been through the strategy side of things in more detail, but this is just a nice rounding bottom here on BA. You've got that nice little rally, the breakout through previous day's highs. For me personally, I got in a little bit late here, but you've got this pullback. It's this buy the dip in an uptrend. And these patterns happen on daily charts if you're swing trading. They happen on monthly charts if you want to be investing, and they happen intraday. And because of the lockdown, because of the situation, because I've got, like most people, I've got nothing else to do. I've got nowhere else to go. I've taken, I quite enjoy at the moment just trading around the open. And this is what I spent some time doing this week, early this week rather. And again, JPM, we can find stocks. This is a 5-minute chart for reference, but we can very easily find opportunities from the wellspring of stocks that we have. So these stocks, they're found. We're going to look at how we do this to clone the replication part of the production line that I use to find an opportunity. And it starts before we even think about strategy. It's what stocks am I going to look at, the universe of stocks. And that's what we looked at prior to the Christmas break. And, how do we clone opportunities? But these are all the stocks that we've taken or that I've taken this week. I resumed my unofficial trading on early in the week on the 6th of this month. So what, just a couple of days ago. I don't even know what day it is anymore. Wow, that's crazy. It's only the 8th of January, and I couldn't quite remember when the 6th was. So we've got, so far, this is the first trade of the year. Again, we can see that, the rally, the pullback, the rallies, the pullbacks, the rallies, it's by the dip in an uptrend. So when we have a systematic approach to find opportunities, we want to find the best opportunities. And again, we'll come on to how we find these stocks. Peloton was another one. That's actually on today's stock list. We'll see that in a moment. Roku was a little bit of a lazy trade. JPM, we don't have losing trades. This was yesterday. JPM was a losing trade. It's that same thing where we've got the nice rally, the nice retracements, but it doesn't always work out. Sometimes we don't get that follow through, and that's okay. So trade management keeps us on the right side of a losing. I'm not reluctant to say losing trade, because I'd take the same trade again. It's a monetary loss, and if you notice the way that I'm wording it, a monetary loss. It's not a losing trade, because the setup, the cloning part of what I'm doing, the buy the dip in an uptrend, it's there every time. I'm going to take that trade every day. And if the markets were open on Sundays, I'd take it twice on Sundays. It's the same setup. It's the canning and the cloning of the setup that we're looking at every day. And when it's not going your way, we want to chop that as quickly as possible with, good risk management. And PayPal was yesterday, a little bit of a lazy trade, afternoon setup. But nonetheless, this is, again, my trading. I usually do these live over the course of the week. Again, I've resumed doing live over-the-shoulder training with this strategy. So if you want to have a conversation about that, let me know. But ultimately, these trades are found by having the wellspring of stocks to draw from that we've mentioned. Again, you can go back and watch Thinning the Herd to, like, how do we get the universe? So how do we clone? How do we find opportunities? I'm going to start my scanning the cloning parts. The universe of stocks that I have is just here on the left. I'm just scrolling down so you can see. I'm only looking at 240 of the best, what I consider to be the best stocks. And for me, these are stocks that are over $50. Again, I've got under 50 there. So they're over $50. They've got 1 million shares traded on average every single day on a regular basis. And they've got options. And that is my universe of stocks. I've got rid of all the penny stocks. Again, if you want to trade small stocks, there's nothing wrong with it. Again, one of the main motivations is I'm trading with options. So I don't really want to trade penny stocks. I don't really want to trade low dollar amounts. I like a little bit of oomph in my movements. If you want to trade stock, or if you're spread betting in the UK, or you're trading CFDs anywhere else in Europe, because I know we've got a global audience here today. So you can look at the lower stocks. There's nothing wrong with them. And maybe you want to look at some of the lower dollar stocks if you've got smaller accounts. That's fine. So I'm just kind of explaining why I've separated off. So all I'm looking at is the top 240 stocks that are over $50 with 1 million shares traded. And that gives me a universe of stocks. So then the next thing I'm going to do is, because the market is still closed, we've not got any price data on the charts. I'm just going to sort all these stocks by the volume here. And I've already done this once a couple of hours ago, so I can look at them again. I'm just going to break them off and just include those in the list. So I'm going to add a few to the list. Just let me resort the volume. So all I've done is I've taken the stocks, the top volume stocks, the top volume. Obviously, there's a few extras. This was originally done an hour ago. So we've got several stocks that have lots of pre-market volume. So one of the scans that allows me to clone the setup, to clone the opportunity, why should I look at this stock versus that stock? Why this, not that? It's something that, a lot of my students will hear me say quite regularly is, why this stock and not that stock? Well, it's all about what's active, what's interesting. If you think about like Uber right now, Uber's traded nearly 2 million shares before the markets opened. And it had done about 800,000 shares about 2 hours ago. 2 hours ago, it had done already 800,000 shares in the pre-market trading. So that's telling me, something interesting is going on. That's not retail traders. That's institutional trading going on before the market opens. So that's why this can be a really powerful scan. What's the most interesting thing to trade before the market opens? Because again, I don't want to look at every stock every day all of the time. I just want to zero in on what's the best candidate. So now I've got the kind of some of the bigger volume of stocks. I can start to sort by the percentage change, that column there. So the next kind of step in the canning and cloning of the production line, which stock should I look at? Well, which stocks are moving? So we've got big volume. So number one on the gap up list is big volume. We've got Baidu is gapping up 8.7%. That's a big move. $18. That's looking interesting. So it means that I can look at, say, anything over 2%. So this list of 40 stocks, I can look at the top 10 stocks and further filter by saying, okay, these stocks have got lots of volume and they're also gapping higher. They're jumping from one level to the next. Does everyone understand what I mean by that? They're going to gap open. We've got 4 minutes before the market opens. But does everyone understand what we mean by that? It's going to gap. Let's just take a look at it. So this is Baidu. So Baidu this is the 5-minute chart. This is the 60. This is the daily. So what I can see, looking at the pre-market data, price is gapping from $210 here to $225 or $226, well, nearly $227. So there's a huge gap. And you can see this before the market opens. And again, for some people, you know this, I speak about this every week. This is how I find opportunities. But what I can also do is, even though I'm looking for stocks that are day trading candidates, what if you don't have time to day trade? Because again, I appreciate everyone's situation, circumstances are different. What if you just want to look for a swing trade? So we can use these day trading setup. Like, this is a great candidate. It's active, super active right now. There's institutional interest. So if you don't want to day trade, again, I do plan on trading this. It is on my day trade list. I can look over to the daily charts and start to think about, well, is it going up? Is it in an uptrend? We've got this nice rally, pause, rally, retracements, pause for a day. It's going to be gapping up to, well, we're just opening up now, or about to open. It's going to be gapping to this level on the daily charts. You know, if we were trading the same setups on the 5-minute as we looked at earlier on the daily, it's the same pattern, it's the same setup. It's rallying, it's retracing in an uptrend. So this gap higher might trigger a great swing trade for a continuation move. Because if you look at the swings, the last swing went from 190 to 230. That's a $40 move. It's gapping. What's it gapping? It's gapping $17, isn't it? It's gapping nearly $20 now. Could it go another $20 in the next 2 or 3 days? What do you think? Oh, $20. So it's done $20 now. Could it do another 20 in 2 or 3 days? So if it just does a similar move to last time, that's all I'm saying. That's my hypothesis. If it does a similar move to last time it did $40. It's done 20. It will do 20 on the gap. That's what it's gapping, 20. That means if it did a similar move to last time, $40, it's going to gap 20 of that potential. That means that there's still $20 over, well, it did it in 2 or 3 days last time. Would it be a fair assumption? Yeah, absolutely. Duncan, that's the exact point. Duncan was just saying anything's possible when it's moving. That's the whole idea. That's exactly the point I was trying to drive home. Like, if you're looking for a swing trade and you don't have time to day trade, well, pop the swing trade on. And the swing trade in this case, it could do $20. Oh, excuse me. It could do $20 in 2 or 3 days very, very easily. So this is how we can find explosive stocks for day trading opportunities and also swing trading opportunities. Does everyone kind of get that? Again, so it doesn't matter whether you're But Phil, I don't want to day trade. I don't even want to sit in front of the computer for an hour or 2 hours looking at charts. I don't have time. I've got the day job. I've got other things. I've got kids to look at. I don't know what your situation is, but that's okay. That's all I'm trying to get to is the same scans, the same cloning process is going to find you an opportunity on a daily charts for the swing trade. Or is it just a day trade? Is it just the opportunity for the first hour of the day, or the first hour of the day, or is it going to be a swing trade for the rest of the week, or is it going to be maybe there's a bigger opportunity? Does that make sense? Does everyone kind of get the logic behind what we're doing here and what we're trying to accomplish? So all I really need to do, again, the market's open now, so the volume scan is not as important. Ooh, I think my platform's just decided to freeze. Trying to do too many things at once there, folks. There we go. All the data coming through probably. Yeah, train stations having a little bit of a hissy fit, if everyone will be patient with me. Asking it to do too many things at the same time. Right, let's try this again. So we've looked at one stock. We're looking for opportunities. BNTX for me was on yesterday's watch list. Now, this is another kind of opportunity where we've got price gapping higher. And I'm sometimes asked, well, again, coming back to that question, well, why this stock versus a different stock? Why this one versus that one? It's not just the gap, because there's lots of stocks that gap every day, and there's lots of stocks that gap on volume every day. So why would I look at this stock versus a different stock? So again, if we think about BNTX, we're back to this consolidation zone. Yesterday, we had a gap above. Again, if we think about prices sold off. Anyone who's short has got stop, wherever they got in on the short trade, they're probably going to have stops past one of the red candles, or maybe the swing high there, or the swing high there, or maybe the swing high there. Anyone who's short maybe is being stopped out. That's the logic, because, we've got price moving down. So when price jumps past, it goes from red to green, essentially. There's a good chance that anyone who's short in the short term for those 2-3 day swings we were just talking about, they may be getting stopped out. And that's going to create further buying pressure. So it could drive the short-term day trade as a great opportunity. So it's not the fact that it's gapping, because on NVIDIA yesterday, NVIDIA yesterday, it did a huge gap. Oh, my platform's decided to be mega slow again. NVIDIA did a huge gap yesterday, but it was still inside its previous day's high or low. So although it did a huge dollar movement, there we go. Although it did a huge dollar movement, you can see there yesterday, it gapped from the low there to there. So we're talking, 15 or so dollars. So it's a big gap from the close to the open, but it was still inside the previous day's high range. And then it ran another $15, $20. So it did a huge movement, but it didn't really do anything new. Can everyone see that? So although there's a big gap on NVIDIA, is there a swing trade on this? Is there a swing trade on this? So let's go the other way. If I was looking at just the gap, again, just thinking about yesterday for a moment. So 60-minute chart here, it went from there to there. That slightly darker bars there, that's the pre-markets. So it's gapped $20-ish, let's just say, but it's still inside this consolidation. Is there a swing trade on this? And a swing trade is just, it's essentially held overnight. It's a very loose definition of swing trade. Held overnight, it could be 2-3 days is expected. It could be 2-3 weeks. It could be 2-3 months. I'd say anywhere up to about 8 to 12 months would still be a swing trade. It's all relative to the time horizon. But just looking at the chart right now, is there an opportunity for a swing trade? It's gapped up. It's gapped into this consolidation here. So if I'm looking at NVIDIA, just based purely on the fact that it gapped yesterday, is there anything more available? Again, because maybe you don't want a day trade, and I get that, that's fine. But maybe you want to see, well, is there a swing trade? Well, I'm looking for the gap. I'm looking for the go parts, but then I'm looking to see if it's breaking past previous swing highs, previous swing lows. And because we've got a very clear consolidation over the last 2-3 months on NVIDIA, maybe if price moves beyond and gaps beyond this consolidation, maybe there is a swing trade, but it's not today. It's not today. So if I'm looking at NVIDIA as a candidate, because it's on the list here, it had a good amount of volume. We've got some good pre-market activity. There's only a small dollar gap. It's not really gapping anywhere interesting is the point. And it means that I can't clone my swing trading setup because I'm looking for very specific conditions. So I'm probably going to leave NVIDIA off the watch list for today. And I'm not even going to worry about it for the swing trade. Yes, there's a little bit of a gap. Yes, there was pre-market volume. So we've mechanically scanned and found NVIDIA as a candidate for, let's look at it. It doesn't mean trade it. It just means let's look at it. So when we have this visual inspection, is it gapping to or from anywhere interesting? Well, it wasn't gapping to, it wasn't gapping from. So let's leave it alone. Does that make sense? Again, I'm just trying to not necessarily quantify, but I'm just trying to give you a little bit of a mental checklist to say, well, why Baidu and not NVIDIA? Or why NVIDIA and not Baidu? Does that make sense? So going back to Baidu, if my platform will, everything's a little bit slow today for me. So going back to Baidu, it's gapping somewhere new and interesting. Could be a good trade. NVIDIA not doing anything new. Let's go on to Grub. So Grub's doing the same thing. So we've got a nice little rally, retracement, and it's gapping above a red day. So anyone who was thinking about, maybe they're shorts for 1-2 days because it was looking like it was going to retrace, they're probably just being stopped out. They're panicking. They've been stopped out. Maybe there's a gap and go opportunity. Looking left, just got to get past this little speed bump here. It's just done that. So maybe Grubhub has got potential to run. Where could it get to? Just look up and left. That's, it stopped here previously. So if we look at the scale, it could go from where it is now, around about $81, all the way up to $85. There's a good $4 potential on Grubhub. So why this stock versus another stock? It's not just the gap. It's gapped above the previous day's high. It's gapped above, looking at the 60-minute chart, a little bit of a consolidation. And on the daily chart, it looks like there's potential for it to run. Does that make sense? Because everyone kind of see what I'm seeing and what I'm trying to describe here. It's not just the gap is the point. Give me a little love in the chat box. Does everyone get this? Why this stock versus another stock? Why this one versus that? Awesome. Thanks very much, Glenn. I appreciate your feedback. The single most common question I get asked. Awesome. Thank you very much, Clarence. The single most common question I get asked is why this stock and not that stock. That's why I spend a lot of time talking about this. And when I was kind of getting into it in a very serious way back in the 90s, I remember asking that question myself. And I had my epiphany while working in Blockbuster Video. I'm dating myself now. One of my first jobs, probably the best job I ever had, was working in Blockbuster Video way back in the 90s. And I remember a sunny Sunday morning asking the very same question. Like, I'm reading all these books. I remember it vividly. Sunday morning, slightly hungover. I'm reading Jack Schwager on futures, a 1,000-page monumental tomb of a book. And it was all theory. No issue with, Jack Schwager is very knowledgeable on the subject, but it was all theory. It was all after the fact. It was all with the benefit of hindsight. How do we find something to trade before it moves? That's the biggest question everyone has. How do we find something to trade before it moves? Not everything is going to move with the potential that we think, but this gives me the edge. We've already established that these stocks, this list of 40 or so stocks, before the market opened today, had 50 to 100,000 shares traded minimum. Some of them were doing 400, 500, 800 to up to 2 million shares traded before the market opened. That's telling us that without having to troll through news or reading company reports, something interesting is going on. Something interesting is happening. And that means that I can just zero in on, okay, well, these are the best stocks today. Now, on today's case, I've got about 40 stocks. I've got a big list. This is unusual. I've got about 40. It's the new year. The funds, the hedge funds, the management accounts, the people who look after big portfolios, they're doing their quarterly rotation, the new year investments, new money needs to be put into the markets. The index changed at the end of last year. As you know, there's the Tesla shuffle in to the index. So there's money going in and out of the market. And again, so it's kind of a busy period the first week of the year. So that's why we're seeing lots of potential opportunities. So normally we'll see 4, maybe 5 things that have something interesting going on. So the fact that we've got a lot of things to look at today is just the way it is. It's just the way it is. But what I'm hopefully starting to demonstrate to and to illustrate is, although there's 40 stocks and it takes longer to explain than to actually do, is just to skip through the charts. So MU is on the list. Micron Tech. We've got a lot of microchip type semiconductor stocks on the list today. If you've for any of the eagle-eyed people. Now, thinking about a swing trade on this. Is the swing trade today, or have we missed the boat? So yeah, it's trending, it's moving nicely, it's certainly doing something new. I'm not going to put a swing trade on this because it's already gone, it's already moved, it's already taken off. If you're looking at this, probably back here, you've got the arbitrage, you've got the break of the consolidation here. There's lots of gapping potential on the way up. So taking this right now, it's probably starting to exhaust. It's probably starting to lose some steam. It's probably not going to give you the big move that you might be hoping for. So for a swing trade, not this one. For a day trade, yeah, looks great for a day trade. For a swing trade, not that excited. Again, just trying to give you a little bit of an insight as to why this stock and not that stock. Tesla's the same. You've got the, again, consolidation here. We're looking for things, it gaps, So there's the new high there. Gapping out of to new highs. That's the trade there. That's the swing trade. It's broken to new highs. So taking this on as a swing trade right now, to be fair, it's Tesla. You could probably just blindly buy Tesla and close your eyes and come back in a year. Just because it's Tesla. Hey, what can I say? It seems to be the stock that always wants to stonk. But if you're looking at this and forget for a moment that it's Tesla, that's the trade. And even if you wait for the next pullback, you've got the pullback, you've got gaps into and pushes out. So if we're going to look for a swing trade, we want it to also not be overextended. Yes, this is doing something new right now, new highs. Woohoo! Great. But do we want to get involved now? Maybe we wait for a retracement. It does retrace. It will move lower. So I don't want to chase the move. So again, just thinking about the why this stock and not that stock. I want to cannon clone the swing strategy. I want to cannon clone the day trade strategy. And as I'm looking through the day trade scan, just because I'm doing a day trade scan doesn't mean I can't think about the swing trade. Overstock's looking interesting. We've got this, it's gapping on pre-market volume, but it's still in that consolidation. So maybe a day trade would be better. If it was to move above $70, where could it get to? Look up and left. There's the first hurdle. It's got to get to 80. If it can gap above 90, when or if it gets there, there's the swing trade potential. Where could it get to? Look up and left. So it's not no. It's just not yet. It's got to do other things first. It's got to do other things. So again, just think, why this stock, not that stock? This is probably a day trade. Probably a day trade. I'm not going to worry about it. There's better things for us to look at. But again, just trying to give you a little bit of insight as to, why this stock and not that. Square is another one. We've already got, as you saw earlier, we had some good day trades on Square, PayPal as well. So we've got price moving quite nicely. It's done a nice retracement. There's the retracements. You've got the gap go there to get in yesterday. PayPal did the same thing. It's now gapping above a new high. So you've got this go opportunity. You've got this nice, again, V-shaped pattern. If you look at the pre-market, there's the rally, there's the retracements. You've got this V-shaped pattern. So if it was going to go, then Square looks great for an entry. And not only an entry on the day trade, but there could also be a nice little swing trade on this. If it did what it's done previously, and if you just look at the swings, it seems to move in $20 clips. Seems to move in $20 clips. So it's done 120. It could do another 20. So it does seem to move like it wants to do $20 clips, and then it'll do a retrace and then another $20. So it seems to like it wants to do a nice little movement. Can everyone see that? Why this stock versus that stock? This is a good example of you've got the day trade and the swing trade. You could day trade into the swing trade. That would be pretty cool. And as soon as I'm finished here in the next 5 to 10 minutes, then that's what I'll be doing. That's exactly what I'll be doing. I'll be looking for my entry on Square. Now, maybe what I do is I jump down to PayPal. Is PayPal on my list? I think I've already got it prepared. Here's one I prepared earlier. So PayPal is on the list. It's already up $5. So PayPal's doing something similar. So we've got that break of the consolidation here, just evaluating the canvas. You've got the breakout, pullback, a little bit messy, but there's the gap and go, push, retracements. You've got another gap here to ignite the move. And if it can get above that swing high there's no reason why, again, PayPal looks like it moves from 210 to 240. So it looks like it likes to swing in $30 increments. Again, just looking at the previous swing from the range high to the range low. Again, it looks like it moves in $30 increments. Is it possible that PayPal could get to 260? How do you know that, Phil? All I've done is added $30 to 230. That's the approximate range low. It could get to $260. It's a $30 movement. From where we are right now, it's another $20. Can everyone see the opportunity that we're doing here? This is what, as always, it takes longer to explain than to actually do. All I'm trying to think about is I've got a production line for swing trades. And all I'm looking to do is buy the dips, sell the rallies. In fact, let me, there we go. All I'm looking to do when we think about trading, canning and cloning, the clone wars. Again, jokingly called this the clone wars earlier. And there we go. Wrong one. Just bear with me a second. So there you go. Jokingly called this the clone army, the clone wars. This is what we're trying to do. So when we think about these types of trades, whether it's a day trade, a swing trade for a few days, a swing trade for a few weeks, it doesn't matter. What I'm trying to do is there's six directions that we can do. 6 directions. I'm looking to buy the dips. So I want to recognize that we've got an uptrend. And we've just done that with PayPal. We've just done that with Square. I want to recognize what the trend is. So I'm going to buy the dip. Hashtag BTFD. Stonks. Fed's got your back, baby. Buy the dip. So when you recognize the trend, again, just like we did, let's just go and take a look. Just like we've done, let's go back here. Just like we did here. It's swinging higher highs and higher lows. It's already swinging. It's great. So recognize the trend. Buy the dip. So any downward movements is an opportunity to buy the dip. That's what we're looking to do. Buy the dip. Conversely, we want to sell the rally. So when you've got an established direction. And again, it could be over 3 months would be the absolute minimum that I would look for. Look back over 3 months. If you're looking at this on lower time frames, you may want to, again, this is like if you want to say, look at a swing opportunity on, say, a 60-minute chart, that will give you, again, a trade for 1 to 3 days. If you're looking for a 3-month trend, maybe you're going to have 1 to 3 weeks as a trade opportunities. And if you look, 1 to 3 days, so 60-minute chart. If you look at the daily chart, and then if you're looking at for the 5-minute chart, if you do this, you're going to be looking for 1 to 3 hours. So that's what we're doing with this trend. So this is what I'm trying to like fit into. This is what I'm trying to canon clone. Does it look like my preconceived notion of the trend? So when we've got buy the dip, we've got sell the rally. So any rally is an opportunity to sell the rally in a downtrend. So all those up movements are the opportunity to sell the rally in a downtrend. So the next thing that we can think about is when price is range bound. And again, we also saw a few examples of that in the short term. We can see that on things like Netflix. We saw that on PayPal about 6 months ago. So when you're looking for trading opportunities, we can do one of two things. Again, on PayPal, it went from range to trend. So it's the same thing. We can trade the breakout, either bullish or bearish to the downside, or we can recognize that price is in the range and we can trade the range. We can look for reversals off the range low, or we can look for reversals off the range high. Now, on the 60-minute chart on PayPal yesterday, this is what you will see, this pattern here. So when I'm looking at the chart and the scanning that we're doing, when I'm trying to think about canning and cloning, I'm first looking at, well, what's the direction? Is it just a day trade? In which case, I'm just going to trade the direction of the gap, the direction of the money flow. But if there's a swing trade, if there's something more, maybe there's something on the daily chart. Let me just change it. Maybe there's something on the daily chart. And if there's something on the daily chart, maybe I've got a swing trade that might last for 1 to 3 weeks. If I've got one of these recognizable patterns on the 60-minute charts, maybe I've got a swing trade for 1 to 3 days. And on the 5-minute chart, maybe I've got the best move of the morning. The gap and go is what you heard me say. On a 5-minute chart, I'm just looking for an hour-long trade, maybe 1 to 3 hours. That's what I'm looking for. So when I'm looking at the chart, that's what I'm trying to think about when it comes to canning and cloning. I'm looking for one of these 6 things. 6, Phil? Is it 6? It really is 6 things. There's only 6 things that we're looking for. Buy the dip, number 1. Sell the rally, number 2. Buy the break of range highs, number 3. The break of range lows, number 4. The reversal off the range highs, number 5. And number 6, buy the reversal off the range lows. There's actually 2 more. The black sheep of the family are counter trend. And if you're in an uptrend, you could sell the uptrend. I don't like trading counter trend. It's not my thing. I like to go with the money flow. It is possible, but there are 2 other things that you can do. It is a viable strategy. I just prefer not to do it. I think 6 directions is plenty. But thinking about the clone, this is the clone, my joking reference to the Clone Wars. This is what I'm talking. I'm looking to canon clone opportunities. I'm going to draw from my wellspring of stocks to say, okay, well, these stocks here, this is my universe. It's only 250 stocks. And of today's opportunities, we found 20. There's 20 opportunities out of 240. So again, hopefully it just reinforces we don't need to look at every stock every day, all of the time. I only need to zoom in on what's interesting today. Now I've got 40 stocks today. I've actually trimmed this down before we did our session today to about 30. It's still a big list, and this isn't normal. Just to, I'm looking out the window. It's snowing. Ooh, Merry Christmas. Just thinking about how do we, if I wanted to day trade all of these, if I want to day trade all of these, I'm going to go to my usual setup and we'll finish it there. If I wanted to day trade all of these, I've got a couple of choices. I can go through my little list of stocks. Again, I'm initially looking for the day trade. So the big chart is now 5 minutes. I've got the daily here and the 60s at the bottom left. So I've trimmed that list. So if you want to take a screenshot, it's there. It's in the members area if you're part of it. But if you want to have a look, this is what I'm planning on looking at today. I've got a list of stocks. I've got the core list, the ones that I normally look at. I've got today only, and I've got some stocks that I'm looking for a swing trade. So Baidu looks like it's not quite breaking that resistance that we were talking about, and it's maybe moving lower. The swing trade is not there. For a bearish trade, maybe the day trade is there, but it's going to be a bearish day trade. And if it's bullish, it'll be a bullish swing trade. So it's in context. Why a bullish swing trade? Because the trend is up. Let's just think about PayPal for a second, which is what I wanted to show you. This is what I was looking at yesterday with PayPal. Let me just get the trade so you can see. Where is it? Broker statements are on the screen. So you've got Peloton, same thing. Where are we? So we've got PayPal. So this is the trade there. It doesn't make sense initially until we actually go and look at the 60-minute charts. This is what I want to show you. So PayPal was a small win just for the day trade. So the 60-minute chart was one of the motivation. Can everyone see that when I was looking at this, and at the time, price was about here. So you've got the rally, you've got the retracements, reversal off the range. Can everyone see that? Price attempted to break out of the range, and it's reversed off the range low. So a range reversal targeting the range high. Now, in fairness, it only got up to a retest of the high. It's gapped and going. It's now, can everyone see right now, on PayPal, this is now a breakout on the 60-minute chart. So maybe I've got a swing trade for 1 to 3 days. Well, that might take me up to the daily high, and maybe I could extend that into a daily swing trade that might last 1 to 3 weeks. Can everyone see this synchronicity of, even if you're not day trading, it's well worth having a look at what's available. It's well worth looking at what's available with these gapping stocks, because these are the ones that are moving right now. These are the ones that are moving. And maybe we can use the day trade entry. Maybe you don't worry about the day trade, and you can start thinking about, maybe you can not worry about the day trade and just start thinking about a good swing trade opportunity. If you are looking for a day trade, we've got a nice little rally here. There's the rally. There's the pause. So I'm looking, we've got the pre-market there. So we've got the gap. We're above yesterday's high. We're outside of that consolidation. There's a swing trade. It's in the direction of the main trend. Can everyone see? There's the trend right there. So this is looking great. So above 241, at the very least, there's the day trade. We've got the 1 to 3 week swing trade. We've got, 1 to 3 day swing trade. We've got the 1 to 3 week swing trade as potential. So we could actually have multiple trades on this. And I can use this if I've got the time in the first half hour or the first hour of the day. Because again, I want to be done in an hour, because I don't want to be looking at every chart every day all of the time. But this is what it looks like. You've got the rally, you've got the retracements. Again, you've got the breakouts, one of those 6 things that we were just looking at, the trends. On the daily, it's buy the dip. And we've got the break of previous day's highs. There's the pullback. So again, there's my entry. Again, so above 241 is looking good. I don't know if this is going to work, folks. What I do know is that I've canned and cloned the pattern on multiple timeframes in this case. This is a good example of, again, just by chance, we've got a good example of, it's a good day trade opportunity. It's a good short-term swing on the 60, and it's a good short-term swing on the daily chart. So we've got a good candidate for all of those things. Final thoughts, if you want to day trade, because again, some people have the capacity to be more active. Again, if you want to be more active than less active, for example, yesterday I was what I considered to be reasonably active. Today I plan on being very active again today, should it allow. So one of the things that I can do is I can put all those little charts, all those 20, 30 stocks that I've got. These are all different charts. And what I can do is I can keep an eye on all of them very quickly, because I'm looking for the trend. I'm looking for the pullback. So you've got the PayPal there. You've got Alibaba there. We've got Roku's just starting. Maybe we get the pullback and trade it there. Uber was bearish. It was gapping down. So we've got this sell-off. We've got this rally. So if it goes below the low, maybe there's a bearish trade there. Microsoft's rally, it's kind of messing around. JD's kind of messing around there. AMD just selling off again. If you look at the semiconductors, they're all bullish and gapping higher. So we've got a bearish setup. So it's against the gap. So maybe I'm not going to worry about that. And I know that because I've looked at all these charts already. Grubbers we looked at gapping higher. Can't quite see the detail because the gap's quite big. But we've got the nice rally there. Wait for the retracements. Buy the dip. It's the same entry setup on the charts that I'm looking at. Again, Baidu we looked at. If you remember, we've got the range there. We were looking at a bullish trade. It's currently selling off, so I'd like to see price go above the pre-market high. I'll be bullish above 228. I usually like to trade in the direction of the gap. So Baidu is just currently waiting. Peloton's had some great trades. Peloton's turning around. So all I'm doing is there's a nice little, for anyone who knows, we've got the opening V. I'm just waiting for the classic entry and maybe an entry above 157. Is what I'm interested in. So what I can do is, because Peloton for me right this second looks most interesting, is again to try and, oops, my platform's decided to lock up again. Because Peloton's looking most interesting, one of the things that I could do is, and I'm trying to do it right now just to illustrate the points, is just change the background of the charts. Oops, a daisy. What's going on there? Yeah, I think my platform's decided to freeze. No big deal. What's going on here? Come on, Peloton, play nice. There we go. So what I can do is, come on. Oh, there we go. So what I can do is just change the background and just keep an eye on it. Just change it to a different color. So it just means that I can zoom in straight away on Peloton. Okay, I'm keeping an eye on that one. So that's what I'm looking for. And then maybe I can kind of do the one on Roku. So it's probably just because I'm using a little bit of computer resources because we're doing this recording today, but I can just keep an eye on it. And if I've got a trade on, again, I can change the background again, just so that I know that I've got a trade on. So if I'm trading 3, 4, 5 things, maybe I've got 6, 7, 8 trades on, I don't know. But if I've got multiple trades on, it just allows me to monitor a lot of things very quickly. This is unusual. I just like to kind of finish off with that comment. It's not common that I would do this, but just because, like yesterday, there was 20 trades. Today, there's 30 potential candidates. It's not necessary to do this. If you think that this is too much and you're not there yet, don't worry about it. Here's how we can trim the fat. So one of the things that we looked at was, these are the best candidates for the day. That was our top list of stocks. What you can do is, if you want to make that list smaller. So what I did is what I did to get the list of 40, if you remember, to get the list of 40 stocks, I looked at stocks that had at least 20,000 shares traded in the pre-market. So if you want to make that list 5 or 6, what you would have done today was look at the top 5 or 6 stocks that are both gapping and have high volume. So if you want to restrict your volume filter to 100,000 shares traded in the pre-market, then that makes sense. There's lots of stocks that have exceptional pre-market volume at the moment, and 100,000 shares is going to be a very clear indication that there's institutional activity in the pre-market. So if you restrict it to those stocks, and if you remember, we only had the top 5, 10 stocks there at the time, so it'll bring that list down to a very small number. So if you want to make the watch list that you have for the day bigger or smaller, that's how you can do it. Right, folks, we're a little bit over our usual time allotment, but that's how we found PayPal yesterday. That's how I'm going to continue to trade it today. That was the clone army, just canning and cloning opportunities. Again, it's just a different way of looking for opportunities or thinking about it. I want to replicate what I'm doing. because the same opportunities present themselves every single day. As if we go back here and we look at the setup, the pattern that we use, the entry pattern is exactly the same on all of these charts, all of these trades. Every single day, the same setups occur, and they're all found with the same scan that we'll look at. Is it gapping? Is there pre-market volume? Is there institutional activity? Is it just a day trade, or is there a swing trade? It's just that, mental algorithm to be thinking about, is there a good opportunity today? And if it is, how does that fit into how I want to trade? If you want to day trade it. If you want to swing trade it over 2 or 3 days, look at the 60-minute chart. If you want to swing trade it over 2 or 3 weeks, look at the daily chart. And again, the same scan will bring up the same opportunities. So once again, thank you for your time. Thank you for your attention. As I said earlier, I do run daily workshops. I'll be resuming them from Monday, where you can quite literally look over my shoulder as I'm trading. These sessions on a Friday, they're a little bit more looser in that I'm saying you can do this or you could do that. There's a little bit more vagueness just because of the wide variety of experiences that we have in our room. But we've got a very consistent production line. I give you as much as I can without overloading you too much. But if you want some extra help, because some of you will have everything that you need, and that's wonderful. You can take this, and some of you have all the information that you need to go and find trades and make them work. It's the missing piece for you, which is awesome. But if you do need some extra help and you want to profit from short-term explosive movements, and you want to learn in the fastest, smartest possible way, focus on the best stocks, the best time to trade, that's what we looked at today. The entry pattern, you can learn this in quite literally 2 or 3 days. We've got a management system. We can time out, target out, or exit out. This is the real secret to success. It's not necessarily the trade that you put on, it's how you manage it. You can master this very quickly in just a few short days, and you can start seeing good success in a very short period of time. You'll never be flicking through chart after chart as you've just seen. You won't be worrying about which way the market's going, up or down, and most importantly, you'll never have to read through boring company reports unless you want to. I don't, but if you do, it's an optional extra. So if you need help becoming the best possible trader that you can be, then send me a message, phil@antivestor.com. Or if you want to go to the website, you can go to antivestor.com/VWAP. VWAP is the name, or you can get to it from the homepage. And you want some help with day trading in the middle there. That'll take you through to some extra information, and it'll also tell you a little bit about the strategy if you've not seen the strategy workshop already. So if you need some help with that, just visit the website, and you can just follow the path that's most relevant to you. And if you need help, whatever level of help that you need, you'll be able to get it. Right, folks, that's me. I'm done. That was the portfolio workshop for Friday, the first one of the year. It's under the belts. The clone army, how do we cannon clone opportunities? It all starts with the wellspring, the universe of stocks that we draw from. And then we're looking for the best opportunities every day. I'm typically looking for gapping stocks with volume. Is the most simplest explanation of what we've just done. It takes longer to explain than to actually do. The reality is this process, when you get used to it, which doesn't take that long to pick up, it'll take you 2 or 3 minutes to find 3 or 4 stocks to trade every single day. Today we're spoiled for choice. We've got a lot of stocks. It looks a little bit overwhelming. It's not normal that we have so many stocks, but for the reasons that we mentioned, there was extra opportunities. But that's what we looked at today. Hopefully you found some value in it. And if you did, that's awesome. My job is done. But we'll be back next week at the same time. And if you'd like to join us, you should be sent an automatic reminder. And if you decide it's not for you, that's okay as well. Just click on subscribe. But whatever you're up to today, have a great day's trading. And I will no doubt speak to you next week. And ultimately, have a wonderful weekend. Find some time to put some joy in your life. We all need it at the moment. I'm looking out the window. It's just started snowing, as I mentioned earlier. The snowflakes look pretty big, so maybe there's a snowman on my horizon later today. Whatever you're up to, folks, have a great one, and I will speak to you all very, very soon. Bye for now.